The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
Good afternoon, traders. It's another wonderful day, and everybody was thinking rather bearish. It's not uncommon to get these kind of turnaround days when everybody's looking at their shoes, which kind of much what it was. I actually don't play futures very often, but a couple alarms went off. I got up this morning, went ahead and bought them, and didn't get as much as I thought, but I still have a fairly decent indicator from my models that show a fairly decent short-term, at least, bullish pattern if we close over 1374 on the S&P. Again, they're not exact numbers, but pretty close, and we're seeing that same kind of resistance levels back in here, so be watching the close very carefully. Wasn't a lot of volume. You would think we'd be having a real dogfight out here today, and really, about 2.7 billion shares so far. We did press at the open, tried to get it out. In fact, several stocks that I've been watching, they tried a little mini washout early in the day, and they didn't really come back so much. They did come back, and so it's not looking so bad. There were a lot of, and we're going to go through some of these stocks that look at pretty fierce support, and I suspect that if we are going lower, we are going to have to jump the creek, break the ice, do something to get to a rather lower price point. Basically we threw everything at them. Everything pretty much went the way that everybody thought it was going to go. So not anything new. The elections pretty much turned out the way everybody thought. And I imagine that the way I look at this market is, does it want to go lower? You would think. But just everybody and their dog is short right now. So every time you get one tick down, there's another guy there as a short, as a natural buyer to buy the stock back up. I suspect we probably get a nice 20-point bounce out of here, closing above 1374 on the S&P cash. It's going to drive the shorts insane, maybe 20, 25 points, something like that, and continue to rally into the Facebook IPO. That's my working thesis. If we close right at 1374, something like that on the S&P, might change it. About 30% of the S&P relates to energy in some way, or highly correlated to the energy sector, that we are still down and not going a little lower. If we got a little bounce out of energy tomorrow, probably wouldn't be too bad. Just under $98 a barrel. What is that? 91, something like that. Dollar index not doing much, up about 12 cents. Kind of banging around just under that $80 level. We'll have to see what's happened. You would think that if we were truly going lower or going higher, one or the other, we'd see some kind of good signals coming out of either gold or the dollar index, and rather muted at the moment. I imagine when it comes, it's going to be big and strong and fast, and we'll have to look at it. But certainly, if we can find Alan, and check, no sound in the den at the moment. So anyway, we can go ahead and check out just how far that's going to be on for those people in the den. Just saying that anything above 1374 has a good model for about a 25-point bounce in the S&Ps from looking at my scans and my models from looking at about 5,000 stocks in the marketplace. We can continue moving on. Today is no homework day. I had to dig deep for a recognition day of any kind today, and I thought I had a choice between this and I think podiatrist day, and foot doctors probably, I don't know. They probably make good money to look at people's feet. So I figured no homework day. This is the day when the school children in the U.S. get the least amount of homework. Someone did a study and found out that's interesting. So what do we have else going on out here? And that is Vertex Pharmaceuticals. Someone piped up in the den about it already. Vertex has announced in a press release that its phase 2 study of patients taking their VX-809, and for anybody that hasn't followed biopharma, they always give it a nice little number before it give it a name. But the number basically tracks it through the study phase. And this drug was approved, found that 46% showed improved lung function after 56 days of treatment. The problem is the I don't know what I want to call it, cyberfibrosis. I'm trying to remember that. It's a genetic order, and it causes scarring on a number of internal organs, but most importantly, it's the lungs. And eventually, you can't breathe anymore. Yes, it has juiced the IBB, which is the pharmaceuticals section. But why did this thing pop as hard as it did? That is because there's absolutely nothing that you can do up to this point. This is the first drug that gives people even a chance of actually living over time, and especially apparently this is a very heavy in the younger kids, and normally they don't grow to be older. So even if it only works on half the patients, it's probably going to be a huge drug. They're thinking $4.5 billion a year in this drug. And going to be very, very interesting to see. It hasn't been approved, but these studies, from what I saw today, are fairly complete. They're not, 10 people. They were fairly large, and over a period of time, and really helps with that scarring, which can probably extend the life 20, 30 years. They think. So, but it is one of those. I guess the way it just turns the internal lungs to a kind of a fibrous tissue, but certainly doesn't allow any oxygen to get in. And I think a lot of people will be glad when this does get approved. They'll probably go on to one phase 3 study, but apparently this one is so good. Normally you don't, you have kind of ins and outs. Rarely do you find something that works this good, and that's why it's got that kind of pop. But VRTX, watch that. I'm not one to trade pharmaceuticals for the reason today you get a lot of kind of things out there that are press releases and they come out of the blue. But I just thought I'd bring this up just because it's probably such a great day. When you live, I don't think I liked living 100 years ago when the only cure was death. Buffett was out this morning, had a 3-hour interview on and off on CNBC. Oh, and Tom O'Brien just did on CNBC, just about 2:20. I didn't get to see it. Andrew Ross Sorkin was speaking with Mr. Buffett and started giving him a hard time about someone turning down $22 billion that Berkshire Hathaway was offering them. And Buffett was pretty quick on the uptake out there, and he said, when a girl hangs on me, up on me once, I'll try again. So apparently you'll see whether or not he can buy whatever company he was looking at. They got talking a little bit farther, and Joe Kernan was talking about him doing the, I think it was on Saturday, he had the shareholders meeting, and he said on the stage he was more likely to get killed by a jealous husband than by prostate cancer. And Joe Kernan kind of brought that back up. And without missing a beat, Buffett replied, "It's certainly been tough when I call your house." So he's still got a, it is kind of interesting. Anyway, kind of last, not a lot of news over the weekend worth reporting. The AT&T CEO was on stage this weekend, and he's kind of lamenting that they ever had an all-you-can-eat pricing policy. In fact, here's the quote: "My only regret was how we introduced pricing in the beginning. Because how we did it, and we introduced pricing, $30 and all-you-can-eat. And basically, it was kind of in response to a problem with them actually making a lot of money and using up their bandwidth. And basically, he said the more people use it, the more infrastructure he has to put out, kind of like it was a bad thing. I don't know. It's kind of like, oh, you wanted those tires on your car, sir. Oh, I didn't know you wanted to actually use those tires. I thought you were just going to buy those tires. It's the kind of attitude a lot of people have. And I don't think he's quite appreciative of all of his customers. But I don't know. It just kind of hit me wrong, but all those guys in the cell phone business do. But one of the last things is we are on the 2-year anniversary of the flash crash. And the Fed actually has come out with the final report. They've blamed it on several things: volatility in the markets, high-frequency traders, withdrawal of liquidity providers, intermarket sweep orders, and market fragmentation. The sweep orders are probably what the report seems to blame the most, and that those sweep orders sitting there constantly bashing the market up and down, pretty much from high-frequency traders. And eventually, any kind of system like that eventually will break. And they just think that maybe now that someone's broken it and got the finger pointed at them, it's not going to happen again. But as far as I can see, there isn't a whole lot of stuff that they put in there other than the fear of God of it happening again. But there are some at least better restraints, probably mostly put on by the programmers themselves at the behest of the people that are paying them to actually kind of check their fire a little bit when it gets too hard. Important political events, of course, we went through this one, big one over the weekend. I thought probably the most interesting thing is that 16% of Greece's parliament now is either true communists, and I mean not just sort of socialist, I mean real communists, and or Nazis. And yeah, you could it almost seems like you couldn't believe that people would vote for Nazis in the 21st century, but they are. Coming up, probably not the biggest deal, May 19th and 20th, the 38th G Summit at Camp David. First round of Egyptian presidential elections, May 23rd and 24th. And May 31st, probably the biggest thing out there is the Ireland referendum on the EU. So, you might see something. I don't know if those other two things are really going to change the market. And I haven't seen a poll on the Ireland referendum. But if they actually start seceding from the Union, maybe that is where we're going to actually see this market break. Anyway, up 3 on the S&P, up 8 on the NASDAQ. Give me a ring, 877-927-6648.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we go through the day here, we're probably going to start charts just a little bit early today. News was amazingly, maybe all the news got, the oxygen got soaked up with the news, political news over the weekend. I had a few comments in the den about, just how nuts maybe Greece is for going that way. But, people get very desperate when things don't go their way, and, they start grabbing at straws, and anybody that tells them things are going to be better, that's pretty much it. There is a lot of that, like a drowning man. One of the first things they teach you is to make sure and approach him from the back so he can't grab a hold of you and drown you both. And unfortunately, those people are throwing out a lot of life rafts, and I have a feeling in the end they're going to regret going down that road. There's some comments about fiscal austerity and how maybe in World War I or right after World War I that caused, the World War II, but it's kind of interesting. Anyway, we've got a lot of stocks that look like they're at fairly decent support. First one that interested me most today was Bank of America. I had this in my newsletter this morning, but certainly looked like this thing was setting up for at least a little reversal, if not a decent one. And it pretty much came on that. No volume so far today in it, but certainly, testing a low, that's certainly what you want. In Bank of America, it had two things. One, a nice little gap out here, and that gap has existed when it popped up on fairly decent volume. Let's see what it is. 364 million shares. Got into it with 260 million shares, on what is that, March 6th. And we came into it and probably had, you really like to see tests, especially of these gap ups or signs of strength on half volume, and you certainly got back and at least touched it for a second day today, or right in that zone. So you have both previous lows and that gap that are in there. I think some people may have read in to Buffett's interview that this was the company he was buying more of today. I can't tell you that for sure, but you'll have to see it over in the next few days, whether or not this continues on. But normally you need to get volume off these lows within about 3 days. Start looking at people moving the other way. But nice movement on Bank of America, and it was one of the ones I was kind of teeing off on Friday when I said I thought at some part we'd kind of made or very close to making lows in this marketplace. Again, I need to get confirmation. We need to get over a 1374 close today for the S&Ps in the broader market. Some of the other markets out there have done individual stocks, let me put it that way. I kind of was talking to Steve Rhodes. I said, I went through a ton of stocks this weekend, and if it's a big name and you know it and it's on CNBC all the time, it looks like it's hit a high and pulled back. If it's not, it looks a lot more like this Bank of America chart in that it's testing lows on much lighter volume as we come back. One of the other ones I wanted to see how it reacted today was Beazer Homes. I think this gives us a good indication. What we saw was a fairly large volume, and we're still getting fairly decent volume out of Beazer out here at these lows, but it's not breaking down. So very interesting. We'll have to see how this happens. What we're keying off of, or I'm keying off of, is this April 10th low on BZH, and that came in at $2.63, 3.6 million shares. We came into it with 6.5 million shares on May 4th, and it's kind of going to have some fairly decent volume today. It is up off the lows, so it's not down volume, but it's certainly, I wouldn't know if I'd even call it up volume. It's certainly volume at the lows. So we'll have to keep an eye on this one. But that home market I looked at actually shorting, and for me, everyone I looked at was just horribly over short. And I couldn't find anything that I wanted to get in. Beazer down here may be telling us a story that even with big volume, it's failing to fail. Another one that looks like it's filled almost all of its gap out here. I wanted to see how it's doing. Probably one of the weaker of these charts that I'm going to show you today is coming CMI. It's pretty much filling a gap up that had huge volume, and certainly not a lot of volume. We'll come back and finish this up. Give me a call, 877-927-6648, and we'll discuss your stock or something else, maybe a broader topic.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
And as we come back, I'm going to check in with the markets here. Was most interested in the volume. Last I looked, 2.8 billion shares. Let's see what we have. 2.9 billion shares. Volume still kind of low. You'd like to see a little bit more drive off the bottom here. I actually had some longs, and I'm going to ease up just a little bit on them and reduce some risk. I'd like to have this thing close over 1374, and I don't know if we're going to get it, but still looks very interesting. And we were talking about Cummings as we left. Again, you can give me a call at 877-927-6648 and discuss your particular stock. But let me see if I can get this. Got to just do a little, there we go, housekeeping, get everything right. Cummings came back in. It's, in fact, when I look at the market, in fact, a lot of the stocks that no one's talking about, not Apple, not Priceline, not Groupon, not Green Mountain, all the normal ones that get 99% of the press. Cummings, kind of a quiet company out here, has had a nice kind of, I've seen Bob Carver call this a polytrend top. I think you could just put a contact lens on it. But as we get back in these last few days, as we fill that gap that originally took off with 6.2 million shares, we've had 2.8 million shares, 3.2 million shares, and probably going to have less than 3 million shares today. So coming into this gap of 2.2, so February 2nd, these are coming back in here to what I think is fairly decent support area. Doesn't mean you can't jump the creek and come on back down, but I would just like to see a little bit more juice out of the market this morning and see if at least a few shorts start to blink. I'm willing to hold some stocks. The index trade a little less willing to hold. So anyway, what else we have coming on in this market? And that is Eaton Vance. Eaton Vance has come back down to test a previous level. Their symbol is EV. Hang on a second over here. They actually, creation and marketing and management of investment funds. You would think that if the market was really going to tank, you'd see a lot of volume down in here. When we look at the last big low, and that was January 31st, came in at $25.50, 2.7 million shares. Last couple of days, 1 million shares, going to come in probably with about 900,000 shares today, maybe by the end of the day. Certainly less than 50% of that last major low and last major spike. Probably, I think a lot of these are probably setting up some kind of trading range, maybe throughout the summer, to see what we have, or maybe waiting for the song of QE3. But it just seems like a lot of these, this is either they've gapped up and come back down with light volume, or they haven't gapped up, but have had, a decent level of pullback on it. If this thing does break lower, you actually, let me get one more down here. You actually ratchet down to about $23.31 on the next move down. But I would imagine that looks like, at the moment anyway, fairly decent support on that. Excel Marine is another industry we've been watching. I know we've heard a lot about people talking in this area about these carriers once again coming back out. They provide seaborne dry bulk cargo, so they are the dry carriers everybody's looked at. What I've seen, and it doesn't mean that you're not going to fail here, but certainly I like the pattern, and that is the March 6th low, $1.58, 1.1 million shares. You get into that about 2 cents higher with 850,000 shares, not enough to make you think that it's not going to come back, do a retest. The last few days here, we actually do have a retest finally of pretty much those lows, but there are two more lower lows, both of them at 1 million shares, just maybe a dime lower. So these things are getting into some fairly significant lows. The problem probably comes in this huge volume up day that started the whole thing, and the sign of strength where it's come back down into. That sign of strength was on February 6th and came in with about 3.6 million shares. You had several drives to the top up here. You still have a high volume move up here for Excel Marine Carriers, EXM, the symbol out here. So we'll have to see how that is coming along. And let's see if I got everything else here that I need to close those tabs. Now, I wanted to check one more thing while we were here, so let me do that, and that is, still hovering right around 1372 on the S&P. I would wonder if shorts can blink before the end of the day. I would think, you'd love, unfortunately, this is not happy for either bulls or bears. I would rather be wrong and have a confirmed long-term trend direction, but it seems very tough for this thing to go down any farther. Even the Dow's just off about 5 points. And with energy being about 30% of the S&P, you'd think if that wasn't working against us, we'd have a much bigger problem. Apple, of course, being a huge percentage of the NASDAQ, up $5, kind of went down there, filled the gap. In fact, I probably ought to go to that next. Fill that whole gap with the earnings shove up, which probably just wiped out most of the people that were short the stock, because I know a lot of people were. Talking about it anyway. That $50 pop really took him out. We kind of filled that today and filled it on dramatically lighter volume. When we're looking at that low the day before this thing took off, It had 38 million shares, and we're coming into that with 15 million today and 19 million shares the day before. So significantly lower than that last little move right before earnings. We have filled that gap and kind of getting a little bit of juice onto the top side here. You could almost say that we could almost come back and fill that one little gap there that's at about, what is that, 560 exactly. But my guess is it's going to be tough to do that given this light volume out here. Not saying it goes back to the top. Maybe we've got a nice little trading range between here and 618 setting up maybe over the next week into that Facebook IPO that no one's heard of. I did notice on the way out the door that they have hourly Facebook IPO updates now on CNBC. If you want any decent sign that everybody knows everything about that particular company, it's going to be tough. Another one is we've looked at this oil services sector. This one had a nice high volume gap. It's coming back into that today. It's Hornbeck. Symbol is HOS. Kind of a nice little breakout here. It came on volume. We pulled back in, and this is where I'm thinking we've got some decent amount of support in a lot of these stocks. When I looked at 600 of them, I kind of got some that are representative. Not all that I would want to trade, but all that make me think that this market's going to have some tough time actually moving down. And that's it popped up, had a nice day up on about 2.7 million shares. That was on February 16th. We've come back down on that and back into it on Friday with 1.1 million shares. Today we're into it with about 655,000 shares. So even some of these that have been a little bit weaker out here are finding some level of support in volume. I know it doesn't make anybody happy that are short, and probably not making anybody happy that's long, but we certainly are going to probably need some more juice. Maybe one more, if you are bearish, one more pop up, maybe 20, 30 points to get the shorts off before this comes back down. Another one, which not as dramatic as a lot of them, but since it's such a big company and moves so slow, kind of a good indicator or trend indicator. And that is International Paper. It's come back in here, two lows now tested. Today we're getting a little doji out here, which is actually not a bad little sign. International Paper is testing the April 23rd low. That low came in at $31.96, 4.5 million shares. And that's using the highest volume, actually. Goes back to about 8 million shares on a high volume down day. It's gone below that, gone below it. My guess is it's going to come right back up to that level, which is not much, maybe about 50 cents. But you're going to have to see some kind of a decent, not capitulation, congestion. Let me put that, it's a congestion zone. But first coming off of it with about 1 million shares for that previous low in April. And now seeing just real light volume and a nice little doji out there. Pretty good indicator. International Paper, probably not a great trader, but a good stock to look at and where the broad economy is going. Normally when this thing starts turning back up, good sign that a lot of people are ordering additional things like packaging because they do make paper, but a lot of it is for that packaging. And you kind of get a little bit of lead 30, 60 days when these things start really moving. So International Paper, not a bad stock to keep watching out here. Again, you can give me a ring, 877-927-6648, and give me a call. We'll talk about your particular stock. So, iRobot, not doing all that much. We'll go on to the next one, Juniper. I wanted to see how this was handling. Juniper Networks had some nice little moves out here. It's coming back and filling a lot of gaps that it had off the original low. That low was December 19th, $18.05. It set up a couple of gap ups, not a whole lot of volume. Saw some volume again, kind of test that upper gap on January 27th on the low there, $19.96. Had just a little lighter volume, 30 5 million shares on April 24th. What we don't see here is these last 2 days getting anywhere close to those kind of volumes as we got in the low. Even the more conservative one up here on March 14th had 14 million shares that were in this, about 7 million shares, probably going to end up with 8 million before the end of the day. Going to be very interesting to see, probably come down and fill the rest of this gap, but not seeing a lot of juice in this move back down. Of course, it's not a huge high volume low down here, but we are breaking through those upper lows that had absolutely massive volumes right around that $20 level. So I just don't see all those bright shining signals of impending doom. Janus Capital, another one that looked, I was talking about some of these stocks that were giving a kind of a, trying to give a little head fake. And Janus Capital, JNS is the symbol on that one. Probably not one that everybody talks a lot about. It used to be kind of a big mover out here. It's had a nice move back. Its last little low was a huge wide day. Ended up being a doji on April 24th. $7.25 was the low on just a hair under 7 million shares. Got into that with about 5 million shares on the 4th on Friday. And a nice, kind of nice little doji. You like to see it lows with lighter volume. And pulling up again, not a whole lot more volume, so maybe a little more consolidation in this before it takes off. But, you know, even some of these dogs out here, in fact, I'll probably try to get to some of the dogs out there, actually didn't look all that bad. In fact, I want to check on them myself, so let's go to them right now. One of the biggest ones is Apollo, and we saw, we'll see what we've got here. Actually, my thesis here is that even the worst of the worst, and I don't know if there's any worse than for-profit education out here with the change in their business model and even a reduction in the amount of money they're going to be getting from the government for forever, the foreseeable future. This one really, I put it in the newsletter today because it not that I'm going to buy it, but it kind of looks like a fairly decent signal out here that we are running out of sellers. The low in Apollo was $33.71 on April 24th, 2 million shares. Got into it, going to probably have just over 1 million shares. So another good 50% lighter volume test. He had 1.5 million shares on Friday. A little lower low today. You still need to close back above the high here, which the low, which is $33.71, to get a decent signal. But it looks like it may pop up tomorrow if the volume continues just this light on some of these stocks out here. Another one was, and again, these patterns are, in fact, you could probably say that a lot of these patterns almost look identical or very close to each other. All the kind of nice little W patterns out here, banging away at previous gaps that have been tested and coming in on fairly lighter volume. The last one on this one that I was looking at came on the January 26th low, 27 million shares. Tested that gap on 10 million shares on Friday. Just getting a little pop out of here. Not a huge signal in here, but enough to make me think that we've got some lows. Anyway, give me a ring, 877-927-6648. We'll be back and talk about Potash Corporation, POT. Not the kind you smoke. Be back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What you think about, you bring about. What you focus on grows. You're becoming an extraordinary trader in Yes, my best student. But even more important is what he's taught me, and the time is now for you to take it.
I've learned that it's not what while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D-point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Go get him, folks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, I was just going to discuss a little bit of something in the den before we get to pot and close the show out here today. But there's an apocryphal story before the crash of 1929. And the story goes that Joe Kennedy was getting his shoes shined, and the shoe shine boy was telling him which stocks he was buying. And, you know, who knows if it's true. Several people since then have actually commandeered the story, and no one's even sure that Joe Kennedy didn't commandeer the story for his own use. Again, I say apocryphal. But everybody, I've had several phone calls, I've had neighbors, I've had everybody ask me if I should buy Facebook. And if there's one thing that it tells me is that if I'm not sure about it, it was probably, the best thing is probably to be agnostic. I dislike a market. Probably the best example is at a poker table. If you go into a poker table and you've got some guys that are really sharp, and you come in and you don't know much about it, you start making all kinds of wild plays that don't make sense. The idea is everybody plays in their own best interest. But what if you don't know what your best interest is? Then you start doing all kinds of stupid things. Poker players actually hate that. They call it being a donkey. It's one of those things. Nick in Nashville says he had a client that said should have pulled in the LinkedIn chart. You know, for me, I actually like LinkedIn a whole lot more than Facebook for a variety of reasons. But I would say just give it a little bit of time to trade. One guy told me that if he transferred $200,000 into an account, I think it was at Ameritrade, that he would be able to get 200 shares. And it just seemed to me, you know, I guess maybe some people are actually doing that to get in. But anything this, you know, generally I find that if I'm going to make money, it's not on the big stocks everybody's talking about. It's not the stocks that are so heavily covered that everybody already knows everything about them. It's the stocks that have really bright visual signals and not the ones everybody's always talking about, like Apple or Priceline or those. They tend to be some other ones. Anyway, potash, with the last couple of minutes I have before Tom O'Brien comes out here, fresh off his CNBC appearance. He came back in here just as I started the show. I saw him come in, looking good for the show, but I didn't get a chance to hear what he had to say. But he always makes a fine appearance on the roundtables. I think he was speaking about gold. Maybe he'll talk about it again tonight in about 10-15 minutes. Potash, taking a look at this thing. Nice little gap up, happened on some decent volume back in about the 12th of January. Came back in, and what was that volume? 13, almost 14 million shares. Came in, hit it with about 9 million shares on March 14th. We're back into that range. And if you want to see a nice little ski slope of downward volume into today, where we've got about, 2.3 million, 3 million shares. Probably going to have just a little bit more. We've got just enough time. I'm going to check in on the market volumes. Of course, I use the consolidated tape of the New York Stock Exchange, which includes all the ECN and all the dark pools, and everybody that ever trades anything. You would really think you'd like this market to be a little higher, but that we did go lower this morning with 3.3 million has to be a little bit indecisive for those people that are on the bearish side. Anyway, we're closing just about flat out here. Nice little doji. So halfway mark, down or a bottom. Be interesting. We'll see you Wednesday. All have a great day.